try to not become the liquidity. I'm pretty sure that you heard this already a few times, and maybe it's time for me to explain you exactly what is this all about, why do traders put so much accent on liquidity, and I'm talking about profitable traders, and how you should use this concept in your favor too. Hello, my name is Andrea and I'm the host of the Gold Funded Trader channel. Welcome guys! Please don't forget to like and subscribe if you're into educational videos, if you're into personal development, if you like content related to trading, if you want to see interviews with gold funded traders, and please don't forget to check our website too, where we have a lot of information about our challenges, about our rules, which by the way, I consider them to be one of the best in the market nowadays. No minimum trading days, the first payout on demand, and many more. So stay tuned, try our challenge, and don't forget to join our social media pages too. You can find all of them in the description box. Okay, now let's talk about liquidity. Okay, so like I always do in the educational series, I start with the theory and then I continue with the charts and I explain exactly what I wanted to say here. So in order for an important movement to happen, we will always need liquidity in the market. 100% absolutely. Liquidity is made from wicks, candles, and ranges. If a movement happens too smooth without no type of consolidation, that is not okay for you in order to take an entry. You can confuse liquidity with supply and demand areas sometimes because basically it's the same thing almost. That's how you become liquidity. You take a trade from a supply or demand area that was the liquidity for the right trade. So sometimes it's the case when we become liquidity, but there's nothing that you can do as a trader except for paying more attention on chart and actually understand the fact that for the trade to happen, you need lots of liquidity. Sometimes you choose to take a trade from a zone, and instead of having liquidity for that, your trade gets taken out and you become the liquidity. How do you know if this is going to happen? Well, you can't really tell without practicing. That's why I recommend you to take more trades from the extreme zones. As I said before, the zone should be visible at least on 15 minutes time frame. This is my approach as a day trader. I consider that if you don't see liquidity at least on 15 minutes and you want to take an entry or on 5 minutes or 1 minute, you should look more because it means that the price doesn't have enough liquidity for the trade to execute correctly. So let's have some examples. Here, as you can see, there was this supply area that I marked over here. And what I show you here is the fact that there are a lot of bearish candles. It's a huge bearish movement that actually represents no internal liquidity for a potential sell move that can happen to the right. So see, no liquidity here, no inducement for our trade. The supply zone that I was talking about, but do we really have to look in this zone for a trade? Not really. Of course, this is a supply zone. Maybe it has some ICs inside too, I mean some refined areas, but there's no liquidity below it. So is this a safe zone to trade? Not really. What I would look for is maybe for the price to take this area first and to look for something above it in order for me to execute a sale if the market structure is favorable. So exactly what I mentioned, I will consider this area as liquidity and I will look for the zone above for a trade. But again, if I look clearly into it, this is on 15 minutes on EURUSD, maybe I would look even above it because this over here is a range. This is the area range that was being formed and it wasn't taken yet. I consider that this is a good source of liquidity too. So maybe the entry would be even more above than I consider over here. It has a doji inside on 50 minutes. It's at the extreme. There was a break of structure to the downside, which makes this swing a protected high. Again, when the price arrives somewhere in here, you saw this liquidity being taken out, right? So you kind of have it. Please observe the price movement. If it moves too aggressive to the upside, maybe it's not time for you to take a trade. If it makes a huge wick over here, if it has a nice reaction, maybe if you see some fake change of character happening before mitigating this area, yeah, you can absolutely go for a sell. But if you don't see more confluences in the area, maybe you should wait a little bit and try to take some trades above. But again, you need the confluences too. So let's go on charts to see more examples. Okay, so right now I'm on GBPUSD on the 30 minutes chart. So what I observe over here is that for this huge bearish movement to happen over here, the price needed a lot of liquidity. And what I say by liquidity is this high over here that was taken out. Besides that, I saw this over here. This was another source of liquidity. So at this point, these two confluences show me that the price was searching for internal liquidity before mitigating an area, which was this week over here. By the way, weeks are considered liquidity too. So the price wanted to take this high over here, this equals over here, and to fill half of the wick over here in order to continue the movement. This was enough for the price to go bearish. However, for the movement to happen, we need some external liquidity too. Do we have external liquidity? Is the price going somewhere? And there's absolutely no sense for the price to go down. So you should check for this. In this example, what I can see is that there was this liquidity formed over here. This was the external liquidity that was pretty good for our trade. Another source of liquidity is made by this equals over here. Again, accumulation to the left. The market went down in order to sweep all of this over here, and it stopped now somewhere over here in this demand area. However, do you see any kind of liquidity over here in order for the movement to happen? Well, I don't really think that a buy over here would be a good buy because, again, right now, if you consider this buy valid, we are looking for internal liquidity, which is going to be this one, right? We have the internal liquidity. But what about external liquidity? Do we have any kind of external liquidity? I don't think so. I only see an imbalance area, a supply over here, and this liquidity over here, which is not enough for the movement to happen. So what I would like to see instead is for this low to be taken to form maybe some ranges, maybe some structure, and then after taking this low, to look for a possible buy in the opposite direction. But again, I need to see some consolidation, some weeks. I need to see something because this movement is too clean. This movement is a straight bearish movement. So for me, for sure, it's not a good time for a buy. By the way, I'm looking for this kind of liquidity every time I'm taking an entry on each time, on the time frame that I'm taking an entry on. So for example, let me delete this. If I want to take an entry on 1 minute, let's say that I'm going to take an entry here. I want to see something good. I want to see this over here being formed. If I don't see something like this before my entry point, I don't take the trade because this represents a good range, a good source of liquidity. Internal liquidity and external liquidity. It makes sense for the chart to go down after sweeping the internal and the external liquidity. After sweeping the external liquidity, the market comes back somewhere around here in this area and then continues bearish. And again, after sweeping this liquidity over here, there's another entry over here, right? But again, if I don't see something like this before my entry, I don't take it because it's risky. Do not try to make trading too complicated. Use a good risk management, use a good set of trading rules, and literally that's it. Do it over and over again and do not go far from your rules. Keep them and use them over and over again. It's like a mechanism that should work. If it doesn't work, try to adapt it. But however, don't change it every week. For example, for me, the liquidity is the most important concept for my trades. If I don't see liquidity, I don't take the trades. My entries aren't even exact entries. My stop losses are pretty large, but the fact that I can see the liquidity on chart helps me a lot to always stay in profit. Please don't forget to leave a comment, to like and subscribe, and also to join our communities. We want talented traders to work with us, to go and take our profit, and why not to interview them after. So thank you for watching, guys, and see you next time.